Friends, continuing with what we were discussing, let us take up the issue of scheme for submission of the return through tax return preparers. See, already in the system we got tax practitioners and chartered accountants who are helping the taxpayers to file the returns. But still, there are so many people who, although having taxable income, still don't file their returns because of lack of awareness and all. So probably this might have made the ministry, finance ministry, to think about introducing a scheme of tax return preparers. There are so many commerce graduates. Probably this may help for them as a income generating measure, and for government so much of administrative headache will come down. So this really made us to think about having a tax return preparer. So who can be a tax return preparer, what should be his qualification, how he has to get registered with the income tax department, all those things are clearly stated by the CBDT. And what is most important for us is to understand that whenever a layman files the return through tax return preparer, naturally what should happen? That is, he should affix his signature on such a return. He should affix his signature on that return. Probably this kind of requirement is given to check whether any wrong advices are being given. Other way around, that it does not create any responsibility, or it's not that we are finally we wanted to put the tax return preparer into trouble, but to have some control we say that is tax return preparer should affix his signature on that particular return. And who is a tax return preparer is, he is an individual. Of course, certain persons are excluded from becoming a tax return preparers. Who are they? That is any office of the scheduled bank with which SSC maintains the current account. See, point here is, if they don't say like this, today what is the environment in which we are living? When we go to the banks, bank managers are crying, stating that, sir, our conventional role now no longer is there as a banker. Today, our managements are asking us to make sale of the insurance products, make sale of applications for different competitive examinations and all. And a day may come when managements may ask us to make sale of cinema tickets also. Thanks that at least CBDT said clearly a scheduled bank cannot become a tax return preparer. Similarly, any legal practitioner in legal practice. Similarly, a chartered accountant. Because chartered accountant, even without becoming a tax return preparer, he is helping. And already we are the authorized persons to do that particular exercise. Again, we need not take up tax return preparer designation. And then, employee of the SSC who is getting the return furnished under the scheme. See, SSC's employee cannot be a tax return preparer. Of course, there will be some underlying objective in making exclusion of these people. But at your level, what is most important is to know who can't become tax return preparers. That exception is most important. Write down. Section 139B. Section 139B. What is it? Scheme for submission of returns. Scheme for submission of a return through tax return preparers. Through tax return preparer. Write down. The following persons shall not be tax return preparer. Shall not be tax return preparer. One is, see, one most important thing that you should remember is only individuals can become tax return preparers. So in that context, what we are saying, first exclusion is any officer of the scheduled bank. Any officer of the scheduled bank. Number two, of course, any officer of the scheduled bank with which, continue, with which SSE maintains the current accounts. With which SSE maintains the current accounts. See, why like this it is stated? Because I know several bank officials, those who sit in the deposit side, stating that we are going to file your income tax returns, or we are going to apply for the PAN number, and they are making the money. So somehow already they have got employment. Let us not entertain those people to become tax return preparer is probably might be the objective behind excluding a bank officer of a bank where the SSE is maintaining his current accounts. Then second, any legal practitioner. Any legal practitioner. Third, chartered accountant. Fourth, employee of the SSE. Employee of the SSE. Then friends, I move to the next section, section 139C. What is section 139C? Power of the board to dispense with furnishing of the documents with the return. Of course, earlier also we discussed generally this particular point. Friends, now we are living in era of paperless returns, e-filings. So in this context, what conventionally we used to attach along with the return of income, all those things are now being dispensed of. Dispensed of का ये मतलब नहीं, that is, even if you don't keep them in your record file for subsequent verification whenever the department wants, that is also okay, it's not the point. That is, we are asking you to keep all the evidence with you. All the evidence with you. Only thing we are saying that the requirement to give all this to the department is not there, but whenever they call for such information, you are supposed to produce that information to the department. So write down 139C, power of the board of the board to dispense with furnishing documents with along with the return. See, in this context, the point that you need to remember is companies and the partnership firms whose accounts are subjected to the tax audit necessarily need to file their return by which mode? Electronic filing mode. That is, e-return is a paperless return and is not accompanied by the TDS certificates, balance sheets, profit and loss account, tax audit report, because in the e-filing, if you see, there we will only specify who is the tax auditor, what is his membership number, what is his PAN number, this details, who signed your balance sheet, who is giving the tax audit report, their details will be given. TDS details will be given. Advance tax details will be clearly be given. But not all that documentary proof will be attached is a point. Then friends, filing of a return in the electronic form, of course, that is Central Board of Direct Taxes can specify who need to necessarily file the returns in the e-format and to whom it is mandatory and to whom it is optional. And it is being specified under which section? Section 139D says. Write down. Section 139D. Board is empowered to make rules with respect to e-filing of income tax returns, e-filing of income tax returns. Then friends, I move to the next section, section 140. Section 140 discusses about what? Signing of the return. Who shall sign the return? See, one thing is, when we discuss section 139(9), defective return, what we said, in case if the return is not signed, then it becomes a defective return. Of course, if the defect is not corrected within the time which is allowed, then it becomes an invalid return. So who need to file the return is also important, and that is being given in section 140. You need not write the whole lot of thing, but listen. In case of the individual himself need to sign, and for any other reason like he is absent from India, then any other person who is being authorized by him can very well sign that particular return. Of course, if the individual is mentally incapacitated, then whoever is a guardian, they will be signing that particular return. And of course, for any other reason, if the individual is not in a position to sign the return, very well the authorized representative can be, duly authorized representative can sign it. Of course, for that, when we say duly authorized agent, necessarily there should be a power of attorney given in his favor. That also should be attached along with the return of income, provided you are doing a paper format of return. E-filing, no, details enough. Then friends, in case of a partnership firm, it is a managing partner who need to sign the return. And in the absence of the managing partner, any other partner can sign. And then in case of a limited liability partnership, whoever is a partner designated for this purpose, he will be signing it. For any unavoidable reason that a designated partner is not available, then any other partner can make a signature. In case of HUF, it is Karta who is going to sign it, and if Karta is absent from India, any adult member of that particular family can sign it. In case of a company, there is a managing director who need to sign. If there is no managing director, or managing director is not in a position to sign it, then any director can sign it. And in case of a company which is not resident in India, then duly authorized person by that particular company can sign. Of course, for doing that, there should be a power of attorney. And then friends, in case of a company which is going into liquidation, it is the liquidator who is going to sign. And in case if it is a government company and all, principal officer will be making the signature. In case of a political party, it is the chief executive of such political party will be signing it. In case of a local authority, it is a principal officer who is going to make the signature. In case of a AOP or a BOI, any member of such AOP or BOI. Then what is most important is an unsigned return is a, what is it, void ab initio, and if the return is not signed in accordance with the provisions of section 140, who is competent to sign, if they are not signing it, then also it becomes a void ab initio. Only this much if you write, that is enough, write down. That is an unsigned income tax return. An unsigned income tax return is void ab initio. Is void ab initio. That means right from the beginning it is not a valid kind of thing. So what is most important before you file your income tax return? Necessarily ensure that it is being signed, otherwise it becomes void ab initio. Now I move to the next section, section 140A, self-assessment. Slowly friends, we are entering into the doorsteps of assessment procedures. That is, by now you are clear with what are the different returns, what are the different type of returns, and who has to sign that particular return, what is electronic form of filing the return, who is a tax return preparer. Of course, one more issue which we have to discuss definitely is the permanent account number. Please do remember, unless we have PAN, today it's not possible for us to file the income tax return. So in that context, let us quickly understand what is a permanent account number and what are the issues associated with the permanent account number, like in which is documents or transactions quotation of the permanent account number is a mandatory kind of thing. So with respect to the permanent account number, first of all, who need to make an application for the PAN? Of course, if you ask the layman says, yes, if I need to file my income tax return, I need to make application for the PAN. But nowadays, this PAN became so important that it became one of the identity proofs also. So that is the reason why so many people prefer to have the PAN. But what the law says under section 139A, first of all, any person who has got taxable income, that is, he has got income which exceeds the maximum amount up to which a tax is not payable, after giving duly all the deductions and the exemptions. Then the second category is businessmen who has got their turnover or gross receipts exceeding 5 lakhs in any of the previous year. In case if the gross receipts or the turnover is going to be more than 5 lakhs, they also need to apply for the PAN. Similarly, a trust or society necessarily need to have a permanent account number. Of course, earlier there used to be fringe benefit tax. Even if you don't require to file income tax return, probably you have got some employees and you need to file your fringe benefit tax returns and all, they also need to have the PAN. And if any person has got an obligation to pay the tax, then they need to have the permanent account number. Similarly, of course, this is one most beautiful thing and funniest thing. AO, assessing officer, using his discretionary power without our applying, can allot the PAN number. Without our applying, can allot the PAN number. Even after our applying, sometimes it's not coming in time. Of course, now they have outsourced this program to so many people, probably now it is coming very fast. But other way around, this is a thing that assessing officer using his discretion, even if the SSC don't apply, can issue a permanent account number. And collection of information. Any person or a class of persons notified by the central government in the case of the official gazette for collecting any information, that is sometimes what will happen, that is a notice may be issued to all the traders in a particular street to collect some information. Probably they may not have the taxable income, still such persons to whom such kind of the notice is given for getting the information, they also need to have the permanent account number. And like one wife for one husband, one PAN. That is, you can't have the multiple PANs, and even if you have got multiple PANs unknowingly, kindly surrender all those things and keep only one permanent account number. That is, having two permanent account is punishable under law. That is, only one permanent account number should be there. Then PAN, where should be quoted, friends? First thing is matters relating to the interest of revenue. That is, whenever you are filing the return or doing any correspondence or tax challans, in all these you have to necessarily quote your PAN number, and all the statements prepared and delivered in accordance with section 200 or 206, there also you need to quote the PAN number. Similarly, purchase and sale of immovable property whose value is transactional value is 5 lakhs and more, that is in excess of the 5 lakhs, need to, there also you need to necessarily quote the PAN number. Similarly, if you are purchasing a motor vehicle, of course not scooter and cycle, other than two-wheeler, there you need to necessarily quote your PAN number. Transactions with the banks, that is for opening of an account, for having a time deposit of more than 50,000 rupees, or for purchasing a demand draft of rupees, of the value of rupees 50,000 or more, or a deposit, cash deposit of 50,000 for one particular day. If you want to make a deposit of cash deposit of 50,000 or more, necessarily they are going to ask you the PAN number and you need to quote the PAN number. Similarly, transactions in securities of the prescribed value they fixed it. There also you have to, if you are dealing in transactions in securities, you need to quote your PAN number. Similarly, on all TDS certificate, TCS certificate, sales tax registration, application for the credit cards, payment of the hotel bills exceeding 25,000 rupees, expenses in cash of more than 25,000 rupees towards the foreign travel, all these places you need to make a quotation of your PAN number. Of course, what is the prescribed form in which you need to apply? And the declaration that you don't have already a PAN number, and categories of transactions to be quoted, manner in which they are to be quoted, all these things board has got a power to prescribe the form and the information that you need to give at the time when you are applying the permanent account number is a point. Of course, if a person is having only agricultural income, he don't have any other income, yes, in all these places where we said quotation of the PAN is a must, there such a person, agriculturalist who don't have any other income, can very well file form number 61. This is of a general practical interest, because whenever you go anywhere they may ask, if I don't have the PAN, what I am supposed to do? Of course, if you are having only agricultural income, no other income, wherever PAN requirement is there, there you are giving the form 61. Then non-residents, of course, they are required to intimate their permanent account number. And then friends, if you require to have a PAN and you have not obtained the PAN, not quoted the PAN wherever it is required, that means you are not complying with the provisions of section 139. What will be the consequential effects? Or you are making a wrong quotation of the PAN number because you wanted to see that the transaction gets completed. Nobody is asking a proof for it. बोल के 10 अल्फा न्यूमरल नंबर से अपने आप एक रॉन्ग पैन नंबर नहीं देना, ऐसा दिए तो you are going to get exposed to a penalty of rupees 10,000 under section 272B. See, at the final level, what is most important for you is to know the consequential effects of not having the PAN is a point. Only 2 points you just make note with respect to the PAN. Permanent account number, section 139A. Section 139A. That is, first, point, persons who have agricultural income and who are not in receipt of any other income, chargeable to income tax, provided a declaration in form 61 is filled by such person is not required to, is not required to apply for the permanent account number. Then side heading penalty. For non-compliance with the provisions of section 139A, for non-compliance of the provisions of section 139A, or quoting a wrong PAN, penalty of rupees 10,000, penalty of rupees 10,000 for each default, is leviable under section 272B, under section 272B. Then friends, of course, having completed the permanent account number, now we have to see the self-assessment tax. What is this self-assessment tax as it is? See, there are different ways by which the government is collecting the taxes. One is what? TDS. Second is what? Advance tax. Third is what? Self-assessment tax. Of course, finally, tax that we make the payment once they demand it. What is this concept of TDS? If you ask me to pay the tax on my income, I may feel bad. But if you ask me to deduct the tax at a source when I am making any payment to Harita, I always say, Mera Bharat Mahan. And one more important thing is, the government require in advance the taxes. So they introduced the provisions of the TDS. Of course, this is too oversimplification. Just for you to remember it, I am saying. What is TDS concept? That is, the payer of the income is given an obligation to deduct the tax at source and pay the balance to the SSE and remit tax to the government and issue a certificate of having paid such a tax to the government, using which the SSE can claim that particular TDS as if he has paid that particular tax. दूसरा चीज क्या है दोस्तों? एडवांस टैक्स. वो क्या चीज है? गवर्नमेंट इज आस्किंग अस टू हैव ए गुड स्लीप, then have a good dream. What is the dream? In that dream, I should dream what might be the possible income I will be earning during this particular year. And on that, what is the tax payable? And such amount of the tax in case of company SSEs in 4 installments, in case of the other than company SSEs in 3 installments, they are asking the SSEs to pay. After all this exercise, after the previous year gets completed, you prepare your own income tax statement, computation statement, find out what is your actual income and what is the actual tax liability on that, then deduct the tax at source, TDS, that is TDS जो डिडक्ट करे सो है आपकी नाम पे, उसको क्लेम करना, एडवांस टैक्स जो आप पे करे उसको भी डिडक्ट करना, then what is the amount of the tax that I require to pay? That will be the self-assessment tax which I need to pay and file the return of income is a point. So that is how you have got the self-assessment tax provisions. Section 140A. Write down Section 140A. Self-assessment tax. Self-assessment tax. It is the payment required to be made. It is the payment required to be made under Section 140A. Under Section 140A, along with the return of income. Along with the return of income. Now, next point. Self-assessment tax. Self-assessment tax required to be paid. Required to be paid is to be ascertained as under. Is to be ascertained as under. First, income tax. Income tax brackets including educational cess and surcharge brackets close on the returned income. On the returned income. Then to that add interest under Section 234A, 234B, 234C. Then from that what you need to deduct? Less relief of tax. Relief of tax under Section 89. Relief of tax under Section 89 oblique 90 oblique 90A oblique 91. Of course, other than 89, the 90 and all these things deal with the double taxation relief. Then less MAT credit. Less MAT credits under Section 115 JAA. Less TDS oblique TCS. Less TDS oblique TCS. Then less advance tax. So now the balance will be what, friends? Final balance is self-assessment tax. Balance is the self-assessment tax. Then friends, one important point that you should remember is, let us suppose you paid the self-assessment tax. Finally, the tax obligation is getting enhanced. or where you required to pay self-assessment tax of 1 lakh, you paid self-assessment tax of 80,000. That means there is a shortfall or not? There is a shortfall. Then because there is a shortfall in what you have paid as a self-assessment tax, automatically you will be liable for interest and all. Then whatever the self-assessment tax that you paid, first will be adjusted towards the interest, then only will be adjusted towards the tax. Whatever the self-assessment tax that we paid, first is getting adjusted towards the interest and then is getting adjusted towards the tax. Write down. Where the amount paid by the SSE, where the amount paid by the SSE under section 140A, under section 140A is less than the amount required, to be paid, under section 140A, comma, then the amount so paid, shall be first adjusted towards the interest and the balance towards the tax, See, for whatever the shortfall, in respect of such shortfall, you shall be deemed to be an SSE in default. Who is a SSE deemed to be in default means where under the provisions of the Act you need to pay this much of tax, whereas you failed to pay the tax or you paid tax less than what you require to pay, then you shall be deemed to be an SSE in default. Then friends, I think the provision is clear in your mind, but take a small example. Income tax including educational cess, as per the return is 1 lakh. Add interest under section 234 ABC, 40,000. Then less TDS and advance, 66,000. Less relief under section 91, 9,000. Balance is what? Payment required to be made. Under section 140A, 65,000. Then due date for filing the return of income, due date for filing the return of income 31/7/2010, 31/7/2010. Then return of income is filed on, return of income is filed on 14/9/2010, 14/9/2010. Then the SSC pays, the SSC pays rupees 20,000, rupees 20,000 under section 140A, under section 140A on 14/9/2010, on 14/9/2010. Then next, the SSC pays the balance, the SSC pays the balance rupees 45,000, rupees 45,000 on 17/12/2010. See, what is the point that we are driving? First point you should remember is, whatever self-assessment tax he paid at the time when he is filing the return, that must be first adjusted towards the interest under section 234 ABC. What is the interest under section 234 ABC? Totally, that is 10 plus 15 plus 15. That is, here already I clubbed it and gave it to you, 40,000. Whereas he is paying how much of the tax now? He is only paying 20,000 rupees of the self-assessment tax. So first this 20,000 must be adjusted towards that particular interest. So whatever the 45,000 which he need to pay is partly towards the remaining interest and partly towards the tax, because total self-assessment tax that is required to be paid is how much? Total self-assessment tax that is required to be paid is 65,000. Usme towards the interest under section 234 ABC is how much? 40,000. That means towards the tax how much it is? 20,000. You have paid how much of the tax? 20,000. But still we don't adjust this 20,000 rupees your tax payable. We will adjust whatever the self-assessment tax that you paid towards the interest which you require to pay. And then only if, let us suppose, instead of 20,000 that fellow has paid 50,000. Let us suppose instead of paying 20,000 that fellow paid 50,000. That means whatever the 40,000 of the interest will be adjusted, and 10 more thousand rupees of the principal also will get, that is tax also will be over, and only remaining 15,000 you require to pay, that too also towards the tax only. So ultimately what is the point, friends? The point which we want to learn through this particular example is, whatever the self-assessment tax that I am making the payment, first must be adjusted towards the interest, later on towards the tax. Why? Otherwise, in case if the department or the Income Tax Act do not say like that, people may say that interest on interest, like money lender, they are taking बोल के बोल सकते ना. So we don't want to take that particular risk. Just like banks, whenever you take any loan, if you make the payment and say that first I will clear my principal, then I will clear my interest, will the bank will accept it? Why? Why they will not accept? Only when there is a principal, again interest can be levied. You can't just like that say that first whatever I paid that you adjust it towards the principal, balance only will be adjusted towards the interest, nobody will accept. Like that only income tax law also says what? Whatever the self-assessment tax that you paid, if it is short of what you require to pay, first it must be adjusted towards the interest and balance only need to be adjusted towards the principal. That is a tax amount. Write down. That is rupees 20,000 paid. Answer. Rupees 20,000 paid under section 140A. Under section 140A shall be appropriated towards interest under section 234A oblique B oblique C. Nothing shall be appropriated in the given case. Nothing shall be appropriated in the given case towards the income tax. Towards the income tax. Then friends, the SSC shall be deemed to. The SSC shall be deemed to be an SSC in default. Deemed to be an SSC in default for rupees 45,000 from 15/9/2010. From 15/9/2010. Thus, the SSC shall be liable. Thus, the SSC shall be liable to pay the interest and penalty. Interest and penalty. First, how do you calculate the interest and what is this interest and under which section this interest is leviable? Interest is under section 220. What is the section? Section 220 says if there is a shortfall in what the tax that you require to pay by way of self-assessment tax and what you have paid. If there is a shortfall, on that shortfall you require to pay the interest under which section, friends? Under section 220. So, how do you calculate the interest under section 220? From which date you are going to calculate the interest under section 220? That when you paid the last, the self-assessment tax. In the given case, when you paid the self-assessment tax 15/9/2010. From that date to the date when you are again paying, you have to calculate the interests. On what amount? On the difference. Actually what you require to pay? 65,000. What you have paid? 20,000. So shortfall is how much? 45,000. When again you want to make the payment? When again you want to make the payment is 17/12/2010. So how many months? 10th, 11th, 12th. Of course, even if that comes to a fractional days, for full month you have to calculate the interest. Actually from 15/9/2010 means 15/10/2010, 11/2010, 15/12/2010. But when actually you are going to pay this particular tax on 17/12, so even for one day beyond that, full month interest you have to calculate. So 4 months interest you have to calculate. Write down interest under section 220, 45,000 into 4 into how much percent? 1% per month. Per annum means 12%. Per month on monthly basis you are calculating. So 1/100, that will work out to be, what is it? 1800. And another important thing is penalty under section 221. Right, the side heading, penalty under section 221. Assessing officer can levy penalty up to whatever the shortfall in the tax, penalty up to rupees 45,000. Of course, Harita was asking a question, that is, sir, in how many cases you have seen this kind of a situation? Madam, try to understand, we are going to discuss one more topic called as penalties and prosecutions. Yes, there are some offences against which penalty is leviable, but if you can show a reasonable cause what made you to not to do that, always there is an excuse. So what we are trying to tell you is, there is a penal provision for this kind of act, whereby the penalty can go up to the amount of the shortfall in the tax. Interest बहुत कम है, 1800, but penalty can, in case assessing officer thinks he can levy a penalty to the tune of 45,000, what is there? That's the reason why you have to be very careful with the assessing officer. Carefully handle him, otherwise he will levy the penalty and you have to go to the higher up to see that that penalty gets dropped. A lot of a fight you need to and convince you have to do. So be careful, but all these penalty provisions you should be well aware. Then only you will be able to correctly guide your, what is it, client.